Welcome back to another market analysis episode, guys. So, a lot of things have happened. The budget has come and gone. I'll talk about that as well. There are three broad themes that I'll talk about today. The first is Indian markets. The second would be the broad themes that are working in the Indian markets. And the third topic I'll discuss about is the US markets, because off late there's been a lot of correction in the US market. And that's become a talking point in our market as well. So the first thing before I come to the various sectors and themes that you have to look at is a general outlook of Indian market per se, within which I'll be covering various points with respect to the budget and of course how things are shaping up. So my last video came out here, that is on July 5th, 2024, which is roughly about 18 days back, about 12 trading sessions back. So since then, not much has happened in the market. The market, that is Nifty 500, has moved up about 1.1% on the upside. In between, we've had substantial volatility here. If you refer to that video and the one before that, where I explained the momentum sectors in the next 3 months, there are a couple of subtle things that have happened here. In this particular space, what has happened is the overheated sectors that I spoke about, which is generally the railway name, the defense names, the engineering, construction, those kind of themes, they have witnessed substantial down move. If you just take the poster boy, which is Masgaon Dock, that particular stock has fallen from 6,000, roughly 6,000 level to something like 4,800 now. So broadly, that is what has happened. Overheated spaces in the markets have cooled down. Meanwhile, there's been leadership in the market in different pockets. I'll come to that in a bit. Before that, if you look at what happened on the budget day, we formed this long tail candle. The closing was fine on the budget day. I personally felt the budget can be divided into two aspects. I don't want to go into the detail because I'm sure by now you must have been flooded by WhatsApp messages, YouTube, and those kind of things. The first part, with respect to the markets, I think the budget was really, really good with respect to the market and economy. But on the second part, which is for the common people, I think this budget was something that has to be ridiculed a lot. Simply being that, and I tweeted about this also. It cannot happen that only one section in this particular country, which is the 3 to 5% taxpayers, are squeezed out of life just because in the last 70-75 years, including the last 10 years of this government, these guys have failed to generate enough number of jobs, and they have failed to bring out n number of people out of the poverty line or poverty level. Now, this current government claims that they have brought out about 25 crores people above the poverty line. If this is true, then there is no need to, tax us on every single damn thing. That is what is actually happening, and it is shameful. But again, it is not our responsibility, it's not our prerogative that in the last 70-75 years, if people have remained poor, only the 5% section of the society has to bear the brunt of it. Meanwhile, globally and even here, instead of going behind the cream of the society in terms of people making n number of crores every year, splurging money when it comes to their social functions and those kind of things, again, the policy of this government has been to target the middle class and squeeze the life out of them. That is something I just did not like. So enough of budget related talk. Let's now come to the facts about what the market is doing. If you look at the market, look at the long tail on the budget day, the message from the market is very clear. It is just refusing to go down. It's a bit scary also, let me tell you, because every time some bad news comes in, market digests it and it just keeps heading higher. There is just no way this market is trying to find a way to correct. I don't know whether this is a liquidity issue or the kind of money that is coming, the retail participation, those kind of things. But for those of you who were here in the stock market in the year 2005, 6, 7, 8, this would be deja vu for you. It would be deja vu for you because in this particular phase, more so from 2006, every time that the market was heading lower, we were having V-shaped recovery. You know, it feels really similar. The only difference being that in 2006-7, the markets were actually correcting 15, 20, 25% and then having a V-shaped recovery. Whereas in our market in recent times, what is happening is market is falling, stocks are falling like 15, 20% in a day. But by the time the day ends, those stocks recover again, and the market, which is down 4, 5%, it closes somewhere in the green. That is actually what is happening. So most of the volatility that is coming in, it is coming on intra basis. And that is never a great sign. So such kind of reversals, market just takes off. I don't know how many of you remember this phase, August 2007 to December 2007, Jan 2008. It was a fantastic trading phase, but it was a really scary trading phase because this was happening, 3-4% drop and again a V-shaped recovery. So it was getting incredibly difficult to hold on to positions. There were a lot of shakeouts that were happening in the market. And if you look at the current movement of the stock market, it is somewhat similar. Yes, the magnitude of correction is not that much, but intraday volatility is significant. So it's becoming a bit difficult, especially the spaces that have run up a lot. They simply fall off the cliff. Correct 5, 6, 7 defense names have corrected closer to what 20 odd percent. A lot of stocks, look at how railway stocks have fallen. So it's becoming a bit difficult in stocks that have already seen a lot of return. So now if you look at what is currently happening, Nifty 500 is again attempting a breakout. This is nothing but a flag. This flag, you're getting a clean kind of a breakout. This particular pattern is visible across many sectors. Nifty Auto, look at this particular sector. This is again a clean breakout. This is again a clean, beautiful breakout in Nifty Auto. It's telling you it's heading higher. There are a couple of vehicles that are lined up. It could be a result of that. Something like a Tata Curve is coming out. Something like Mahindra, I think Thar, that is 5-door Thar is coming out. I don't know, they're calling it Mahindra Rocks or something. A couple of, electric cars from Tata, and Tata Nexon is coming out again. So I think auto sector is telling you clearly that it is attempting to head higher, and it's a bit too much when you look at the charts, but then you cannot argue with the market. Even before budget, I had the feeling that auto sector is finally topping out. It could be that the Hyundai IPO that will come out, that would be the final nail in the coffin for auto sector. But this sector just refuses to go down. If you cannot understand which stocks to pick out, you have Nifty Auto ETF also. ETFs are wonderful. Yes, they won't give you similar returns like stocks, but at the end of the day, you will end up making significant gain if a sector theme works out for you. The Nifty consumption, almost all sectors are heading up in one direction. Banks and finance, have retraced a bit, but I think banks should be on your watch list. If you look at the recent price action of banks, that is today, a lot of people have been shaken out from 53,357 to something like 50,700. Look at this candle. This is a bullish engulfing right at 50 DMA. And a lot of people are not looking at banks. You should be. IT and FMCG, I had alerted you 3 months back. These sector trends have played out in a fantastic manner. So these are my original markings when I'd explained this. So I was initially actually expecting a pullback in IT that never came. It just kept heading higher. So from risk reward point of view, I think there are only two spaces where you have to pay attention. One is the metal space, and another one is the banking space. Now, within the banking space, I think today ICICI Bank, because you'll be watching this video on Saturday, ICICI Bank would be coming out with numbers. If you look at the recent track record in private sector banks, it is ICICI Bank that has always given fantastic set of numbers. So if Bank Nifty, that is if ICICI Bank comes out with great numbers, I think you will see further fill up in Bank Nifty. Again, why? Because this is a sector that has shaken out a lot of people recently, pulled back to 50 DMA. And now it is again attempting to form a wide range candle. Apart from that, sectors and themes are stretched. Recently, Mr. Ramesh Damani spoke about the digital space, digital index, that is Nifty digital index has staged a breakout. Again, go to the NSE website and see which stocks are there in this index and are they exhibiting similar patterns. Then you got to make a call whether you can go behind those stocks or not. I know those stocks, it's just that I cannot spell out now because of SEBI guidelines. This is multi-infra index, again a clean breakout. Then there is this mid-cap index. Mid-cap index keeps heading higher, mid-cap 50. This is a new breakout. Again, which stocks in this particular index are staging a clean breakout? Those stocks automatically have to be on your watch list. And then if you find some entry method, you can go behind it. Space out your bets. That is what I'll tell you. Remember, we have front-ended a lot of returns in the market. Year to date, a lot of these sectors are already up 35-40%. So I don't know when that pullback will come in the market, but whenever the market begins to pull back, that pullback won't be pretty. It won't be pretty because it's highly unlikely that sectors like CPSE, PSE, Realty, Auto, which are already up 40% in this particular year, they're heading towards another 30-40% on the upside. So someday, some month, we are going to get a pullback in the market, which will normalize things, and that gives a better risk reward. This brings us to the point of how to bet in this market. See, if you want to do a one-time scale-in or aggressive scale-ins, then I think ETFs are your best bet. You have mid-cap ETFs now, small-cap ETF now. You have Nifty Junior, Nifty, Bank Bs, PSU Bank Bs, Infra Bs, IT Bs, FMCG Bs. You name it, except metals, I think you have a ETF for every sector in the market. The newly listed sectors, something like defense and digital index, that does not have a ETF yet. But right from realty, auto, commodities, every sector now has an ETF. So if you're looking for quick scale in, building positions quickly, I think ETFs are your best bet. But let's say you are someone who does not prefer ETFs and you like Tata vehicles that are coming out. Tata Curve is coming out. So if you see recently Tata Motors has given a breakout, and because this is a stock, I have to make a disclaimer. This is not a recommendation. I'm just explaining a position sizing concept. So if you look at the weekly time frame chart, Tata Motors has now broken out of a long-standing flag here. This is nothing but a flag accumulation kind of structure. Now, if you are scared that the market can pull back, SIP is your best bet. Look at how much money you want to put in. If you want to do a 1-year SIP or a 6-month SIP or a 9-month SIP, divide it into small chunks, put it. That is if you like Tata Motors, if you have researched on this. I hope you get the point. For stocks, it is a slow and gradual approach. For quick scale-ins, ETFs are there. So I hope you understand this particular point. So what you can do is you can go through all the sectors that are there in the in our market and see which sectors are breaking out, and then correspondingly which stocks in those sectors are exhibiting similar patterns. So now let's come to the US market. See what has happened in the US market. A couple of days back, US markets started to fall a lot. If you look at daily time frame chart with 50 DMA, S&P 500 actually went below 50 DMA, and today it is attempting to move up. If I'm a betting man, I would tell you US is in a sound bull market. Nothing is wrong. But why this sell-off has happened? This sell-off has actually mainly happened, that is my understanding, ever since, I think, behind the scenes, President Biden decided to withdraw from the race. See, the choice between Donald Trump, that is President Trump, and Biden, a lot of polls and a lot of experts were saying that it's a clear victory for President Trump, especially after his assassination attempt. Now, I'm sure all of us have gotten highly skeptical of polls, whether it is exit polls or pre-polls, given what disaster happened in our market. But you could get a sense that President Trump, especially after assassination attempt, was gaining a lot of popularity, even within the Democrat voters. So now what has happened ever since President Biden has pulled out, and I think definitely people must have known behind the scenes, you've seen a sharp reversal coming in the US market. At least that is how I can link it to the politics. You can see a lot of economic reasons also, but I think it's because of this, because Vice President Harris seems to be very popular among a lot of people, and now there seems to be a strong kind of fight that would take place between Vice President Harris and President Trump. See, my take on this entire election cycle in the US is that it's an important cycle. It's an important cycle because currently Vice President Harris does not have a track record when it comes to her policies. Uh, Her vice presidency has not been that great. It would just take you couple of hours to research this on Google, and you would see how widely unpopular she has been as a vice president. So if she and there are a lot of topics about which she has already spoken, and those topics don't appear as market friendly. So what is likely to happen is that market is going to take cognizance of the fact whether President Trump is coming back to power, or it is Vice President Harris who's gaining in polls. I think US markets will remain in a bull market. They would wait for more clarity. Currently, there is a lot of fear that Democrats would again win. There are a couple of amazing Wall Street Journal articles that came out. I'll just put out the snapshot of it. Do subscribe to Wall Street Journal. It's a decent newspaper. Gives you a lot of insight about what is happening in the US. I follow it closely. So I don't think there is anything wrong. I'll also put up some market breadth data for the US and for us that I recently shared a couple of days back. So that would also help you understand how the US market is positioned as of now. So now let's come back to themes in our market. Now this is the third section. Within themes, I would tell you that as of today, the CPSE, PSE, and the defense names are a bit out of favor because they're over owned. Especially if you look at railway stocks, defense stocks, they've corrected significantly. On the budget day itself, a couple of stocks were down 10-15% also. So there's naturally a lot of scare in that sectors. I think these spaces will again bounce back. So the continuation themes will be CPSE, digital, CPSE, PSE, auto, and railway defense. These are the 5 pockets that were earlier leading the market. I think all of these pockets have not made a new swing high or a lifetime high. It will happen over time. These stocks have to be again on your radar. What is clearly giving an indication of strong continuation in the market? I think I personally don't trade the nifty pharma healthcare space, but this space is brilliant. It's heading higher. A lot of things are happening. So if someone is into pharma sector and those kind of things, this morning also I posted about this. So this space is a different space, low accumulation space, but I don't understand the pharma healthcare space, so I don't track it. But the first space is auto. This is a clear breakout. The second is digital. Again, this is a clear breakout that is playing out. IT and FMCG and pharma are going to cool down a bit. Then comes Nifty Mid Cap Select, which is the entire mid cap space. This is again a fresh breakout. Look at which stocks in this index are clearly breaking out in a similar manner. So what is this? A long tail, slight pullback. This is continuation. So you have to pay attention to this. Infra is again making a move. So these 3-4 pockets are the pockets which are continuation kind of pockets, where risk reward maybe is 1:2, 1.5, not great. Now, which pockets hold the maximum risk reward? See, always remember the pockets that have fallen a lot recently, have given a lot of shakeout. Those are the pockets that hold maximum risk reward. So within this space, I would come to Bank Nifty. Bank Nifty is just at 50 DMA. See which stocks you understand in Bank Nifty. Which stocks are forming the similar pattern? Which stocks have fallen the least? So if I have to give out a template to you, find out which stocks have fallen the least from 52-week high. Which stocks, while falling, have exhibited tennis ball price action. What is tennis ball price action? When the price is coming down, the volumes have to contract. And number 3, which of these stocks have a better relative strength? That is comparative relative strength against both Nifty and Nifty Bank. If you follow these 3 points, you will get to 3 or 4 top banking stocks that are there in this particular sector. The next space is metals. Metals is another sector that is under-owned, has had a lot of shakeout. And after the shakeout, I won't say the structure still is great. It's still below 50 DMA. But on higher time frame charts, if you look at this particular sector, this just looks like a nice pullback that is coming in the market. And this would be the trend reference level, which is the election day volatility low. So again, conservative traders, conservative investors, this is nothing but an opportunity for SIP till this particular point is taken out. Which are the main stocks in this index? It's Tata Steel, JSW Steel, JSPL. I think Adani Enterprises is also in this. Coal India is in this. Wellspun Corp, Hindalco, Vedanta, all those names, some 12 names are there in this particular index. Look at which stocks are clearly outperforming the metal index, the Nifty 50 index. Again, you have to follow the same template that I just explained with Nifty Bank. Stocks that have fallen the least, tennis ball action, better RS. In metals, it would be against Nifty Metal and Nifty 50. If you follow this, you'll get roughly 3-4 metal sector stocks that you have to really focus upon. Now I'll talk about broad risk reward in this market. See, you got to understand that currently in our market, as I spoke about in the previous video also, risk reward in the market is just not great. If you look at the higher time frame charts, this market, again, look at the candle. This is a long tail candle. Currently, Nifty is up 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row. And this long tail candle is again a sign of further continuation in the market. What you should be doing is mark the low of this candle and mark the high of this candle. And now track what the market is doing. At some point in time, you will get consolidation, and this market needs consolidation. It needs time correction. Probably we are in a high momentum kind of phase. If we see today reversal sustaining in the US market again on Monday, we are going to see further up move. This up move may last again in the month of August, September. I don't know the time. Stocks are doing really, really well. Focus on risk reward. But if you zoom out the chart, this is some kind of vertical movement that is happening in the market, something very similar to this movement. So I'll just bring you here. This is a similar movement. Can you see a similar movement is happening in the market? So enjoy this phase while it lasts. But I think the next 6 to 12 months in the market would be highly rewarding for people who gradually accumulate, who will make use of the volatility. Market is giving you immense volatility. Of course, after the event plays out, you realize it's a buying opportunity. But for someone who's accumulating gradually in a SIP or a STP manner, I think stocks, that is the way you have to participate in the stocks in this market. To avoid FOMO, that is fear of missing out, I covered in the first part of the video, you have ETFs now for almost all sectors where you can bet 1%, 2%, 5% of your portfolio size on a particular ETF and then manage the risk. So the market is suggesting continuation. The risk reward in the market is just selectively available in a couple of spaces. In other spaces, or the majority of spaces, it is, I think, 1:1.5. And third point is the market seriously needs some bit of time price correction. I don't know from where that would come. US election seems a catalyst here. If Democrats are again going to come back to power, then I hope you've seen the Wall Street Journal articles that I've posted. If they are really going to come back to power, then I think US markets would see further sell-off. It's just because President Trump has had a record, and this is only about stock market. I don't want to talk about or discuss about something else. During President Trump's term, stock markets were doing exceedingly well. And if market gets a whiff of President Trump again returning to the Oval Office, then I think US markets are going to significantly move higher. In that case, emerging markets, India, this crazy momentum phase, and that is what I would like to brand it. This is a crazy momentum phase in the market where people are desperate, chasing, bringing money into the market. Retail is blindly putting money. This will continue. All right, so I'll see you in the next one. Take care and be safe.